Hello everybody, welcome back. Patreon live stream tonight. If anyone wants to join for that, there's links in the description below. We'll look at whatever it is you want me to look at through that 2-hour period. We do 2 of them a week, Tuesdays and Fridays, and so yeah, if you want to join, links in the description below. Other than that, let's just get straight into today's video. So we're looking at Bitcoin again on the 4-hourly, same as yesterday really, attempting to break out with a view to maybe move up on the 4-hourly to this 200 simple moving average, which is just below $62,000. Momentum's still okay. It's not fading away. We've had 1, 2, 3, 4 candle bodies close above this 200 exponential, but we haven't really managed to get any kind of major support. But it does look okay for an attempted breakout still. Now, if we go to the daily, we're the same as we have been for the last few days, and other than apart from the last 4 days in a row where we've hit this resistance 1, 2, 3, 4. Go back in time, there's also been 5, 6, 7, 8, 9, 10 rejections from the 50 simple or exponential moving average, which is partially a death cross really for simple moving averages, not exponentials. So look, I mean, it could move up, it could move down. If it moves up, the next major resistance is going to be here, which would be a full-on death cross retest of the simple moving average, that 200 simple moving average, the uptrending, by the way, yellow moving average, and that comes in just around 63,000. I am not saying that the crash has to come today or the crash has to come at all. In fact, the very word crash is so sensational. This is why I said on that video, this is an idea. It's an idea. It's not a call. It's not a guarantee, but it's an idea, and one that I felt needed to be expressed. And obviously I received loads of DMs about it. When's the crash? How long will it take for the crash? When is this crash? Shall I sell everything because of the crash? No, my God, no. Look, currently we are looking on Bitcoin for a death cross retest, which is still in keeping with a consistent consolidation and strengthening of a downtrend, which is fine. Absolutely fine. We expected consolidation throughout the summer. We're still in the summer, believe it or not. We're getting it. And talk about this pullback, dump, crash, whatever you want to call it, in the form of not just the current downtrend for Bitcoin, but also a potential double top on the S&P and a major area for the Dixie. So I'm just trying to express this idea one last time to avoid clogging up my DMs again, right? So Dixie coming down to a support. When we hit supports on anything, you expect to be supported at supports, just as you'd expect to see rejection at a resistance, right? It's just a simple rule of trading. That's all it is. And we are currently coming back down to test that support, which is just below 101. So it doesn't mean that it will bounce here, but educated guess would tell me that it would bounce. Doesn't mean it will reverse, but it would likely bounce. So that's just one aspect of this. Now, as we see that moving back down towards that level today without any bullish divergence on the higher term timeframes or the lower term timeframes, maybe we do break through it. And if we do, the next level will be just below 100. I'm all okay with that. This is also a downtrend, but look, nothing goes down forever. This is a major area for a bounce. If we go to the S&P, or we'll just go to US 500, we talked about this when it happened. Remember that Monday crash several weeks ago? And I said, look, I'm taking positions here, all based around this chart, where we hit a 200 exponential moving average, where you would normally expect a V-shaped recovery, and potentially more. So what happened? We hit the 200 exponential. We're currently up 10% on the S&P from that area, exactly as predicted. But I exited that position. I'm out of it now. The V-shaped recovery looks like it's taken place. We've avoided or pulled back ever so slightly from the previous all-time high. So the front run has taken place. So we're looking at this on a daily, currently getting picked up on a 7 simple moving average. The chart still looks like it wants to have another attempt to break out from here. V-shaped recovery and then some. So you get the V-shaped recovery, sometimes you get a then some, sometimes you don't. Now let's have a look at what's going on over here. So the money flow index is reading relatively high, but not overheated high. But if we go to the 4 hourly, it is overheated. We've got bearish divergence. This is only US 500 capital.com futures market. If we go over to the S&P, you'll see overheated reads on the money flow index here. A hidden bearish divergence also, which suggests a pullback is going to come here. So, and again, just on the 4 hourly, 4 hourly suggests pullback. That's fine. It doesn't mean complete crash. I'm just pointing out something, that's all. And all markets are correlated. And the Dixie, as we know, is usually the leader. It goes Forex, stocks, precious metals, commodities, whatever, crypto, well, Bitcoin, then altcoins. Remember, altcoins are nothing. Absolutely nothing. I talk about XRP being the best chart in crypto. It's still just a crypto. And that's all it is. It's just a crypto. Doesn't mean it's the indestructible chart of the world. No, nothing is. We see it when the bigger markets go down, everything goes down. Even Bitcoin, which is the store of value. There's no point in having a store of value if you can't take value out of the store. That's why it goes down as well. Same thing with gold. If gold's a store of value, why does it ever go down? Because people need to pull money out of it. There's no point in storing value. If you need some value, go to the store. So it'll all come down if it has to come down. And the S&P looks like it wants to come down because it's overheated with hidden bearish divergence. And the Dixie looks like it wants to bounce. But other than that, though, we're talking back on crypto, back to Bitcoin. We've hit this area again. It's like Groundhog Day. It's the same thing as yesterday and the day before and the day before. So if we break here, if we break out from here, the next major resistance is up here, and if we break from here, the next one is here. So at the moment, we're at resistance. Expect rejection at resistance. If we break out, there's another resistance above us. Expect rejection at resistance. If we break out from here, expect resistance, blah, 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 blah. The only time we can consider a full-on breakout is when the channel breaks, and in that, if it were to happen today, would need to be a complete breakout and a closure above 69,000. Don't think it can't happen. It certainly could happen. Is it going to happen? Well, based on what we see right now, the momentum still suggests further upside. However, we are at resistance. A resistance that we've had a problem with. 10 candle bodies in a row. Bang, ba, bang, bang, ba, bang, bang, bang. So, look. Always expect resistance to reject price action. That's all I'm saying here. Now, for the idea, of that big dump, that massive crash, don't sit waiting for something like that to happen. You can assume something like that can happen based on the higher term time frames. So I know that most of you understand this because I only get a few comments and a few DMs about it. Otherwise I'll be swamped with it. You can look at charts on a variety of different time frames, 15 minutes all the way up to a 12-month time frame, right? So I was looking at high-term time frames to say, hang on a minute, things look pretty overheated over here. And if we did pull back on these higher-term time frames for Bitcoin and on the S&P, and we'll talk about this in the form of, first of all, a weekly to begin with, just because that is a high-term time frame. It's normally the largest I'd be looking at. We would assume that maybe we will get support down here in the low 4,000s, 4,300s. So 20% move. That would be a crash in most people's books for S&P. Now that is the measured move all the way down to a 200 simple and exponential. If we just go back to the weekly for Bitcoin, we also have 200 simple and exponential all the way down here. We could measure that from today's candle body, and look, you double that. So you double that. S&P moves down 20%, Bitcoin moves down 40%, all absolutely perfectly in keeping with the bullish trend. It's a perfect, decent opportunity to buy, and there's nothing particularly wrong with that. That measured move takes you all the way down to 36,200 at the moment, at the lowest target. And I mean, lowest target. I don't expect it to go down any further than that if something happens. And this is what I'm talking about. You can trend down normally and naturally as we've expected throughout the summer. We can see that. It's a very clear downtrend. It's a consolidation as predicted. But oftentimes, when markets consolidate, especially markets that generally only ever go up, like Bitcoin, like S&P, like generally most major markets that only trend up, you want them to go down as low as possible, and sometimes a consolidation, a natural consolidation, isn't going to be enough to take you down to levels which would wipe out longs and offer entry points for, well, like I say, people who want it, who are perhaps missed out from lower prices or want to get back in or get in at all from a lower price. And so events might be, what's the right word for it really? Because I don't want it to sound conspiratorial. But events might be not created, but accentuated to bring price down. It's just noise. That's all it is. You know, I like to trade based on charts. I don't trade on anything else. But we do have to accept that at the moment there's a lot of stuff going on around the world, and there's a number of things that could move this market down. Not just this market, but all markets. And if that was the case, we look for a 40% drop for Bitcoin to its absolute low, and 20% for S&P for its absolute low as well. And that would be a nice reset where you would expect to see a V-shaped recovery similar to how we saw one on the S&P recently on the daily. So the S&P bounced on the 200 exponential on the daily, didn't it? And let's just admire that move again. Again, it's just charts, isn't it really? When this happened on that Monday, I woke up very excited. Very excited. When the rest of the world was like panicking and flapping around, I said, look, very, very likely chance of a V-shaped recovery here. You know, enter into positions, have a great day. You know, this was a 10% move on the S&P. Now, if we would just expand on that idea, just go back to the S&P on the weekly, it's the same setup on a higher term time frame. Weeklies take longer, you've got to have the patience for it. It might not happen, but if it were to happen, then you come all the way down here and then you V-shaped recovery out of it into next year and then back up to new all-time highs. That's what we'd be looking for. Same thing with Bitcoin. It's not the end of the world. Bang, all the way down to here, V-shaped recovery and then some back up to new all-time highs. That would be the situation. So all I'm saying is that I'm exposed to crypto massively, but I wanted to keep a large amount of money in the event that that does happen. And I've got the patience for that, you know. There's a difference between a daily, a 4-hourly, a weekly, and in even higher time frames, right? You just got to be prepared to roll with it, okay? Don't get married to one particular direction and bias. And personally, it does look like Bitcoin wants to get rejected from here, but if not, then here, and if not, then here. But the bigger markets are the S&P and obviously the Dixie. And the Dixie, again, as we see, looking like it perhaps wants to bounce from this major support. And look, it's not going to be a bounce that's going to take you all the way up to the top of this rising channel. It could. I doubt it. I very much doubt it, especially with cuts around the corner. It's only going to bring this down. But a bounce from this level, or roughly around this level, is most likely going to happen. Look what's happening. Look where we are on the weekly. 200 exponential, 200 exponential. We're below it now. 200 simple ever so slightly below here. Basically, still maintaining price action above 100. A bounce from there is most likely. I know that it's exciting for anyone who's invested long term or has a perma bull bias that this is going to break, and look, it may. But the rule, and the main rule, is always expect support at support and rejection at resistance. It's just a simple rule, to assume anything other than that, unless there's good reason for it, which I don't see currently. This is what's most likely to happen. And if you want to make money out of markets, you have nothing more than statistics to go by. And if it's most likely to happen, that is statistically more likely to favor you if you hold on to that particular bias, because it's based on nothing more than statistical likelihood of outcome. That's all it is. That's all it is. It's not that I'm saying it will do this. It's just that it's most likely to do this. Whether you like it or not, that is the most likely outcome. It doesn't mean it's the guaranteed outcome. It's just the most likely. That's all it is. So I just wanted to put it to you once again. Same as yesterday. Bitcoin at resistance. S&P looking like it wants to cool off on the 4-hourly. Dixie approaching major support. There is symmetry across these three major markets, which is suggesting pullback most likely for the assets and a bounce most likely for the dollar. That's it. Same as yesterday. Hopefully I've made my point clear here. I've mixed the bull and the bear case together so we can all understand it. There's always going to be validation and invalidation to any particular trade, which is why I think some people struggle watching these videos and they're like, well, you said this is going to happen, but it doesn't have to happen. This would be invalidated if we burst above here and close above here on the daily. Then we'll be looking to see this area on the daily, and if that gets broken, then we see this area, and then we see this area. These are all areas where you'd expect resistance from, and if we break out from here, it's time for a new all-time high, basically. But currently, the most likely, as of this very second, half past 8 in the morning, it looks like another opportunity for a resistance and a breakdown, and maybe even trend all the way back down. That's all I'm saying. Statistical likelihood of price action as of this very moment in time. Don't make the mistake that I'm sitting here watching this and going, I watch it break out and still expect downtrending. I don't sit here and marry a particular bias. If you're a trader, you want to make money from trading, you have to be able to adapt to the market. You have to, otherwise you will always lose. But at the moment, that is the most likely outcome: a resistance to get rejected, to go down. And then, obviously, what would you look for when it goes down? You look for a support, don't you? Where's the next support? And there's a number of supports out there. Simple. I know it's simple, but for a lot of people, they can't grasp it. Anyway, I'll leave it with you there, but I hope you have a nice day. Take it easy.